Hello, everyone. I am Michael Ruger. I am the managing partner of Greenbush Financial Group. A lot of calls from clients recently amid the sell-off on the stock market, as well as all the tariff activity, asking questions like, do we think the stock market's near a bottom and it's going to rally? Do we think the economy is eventually going to tilt into recession, given all the tariffs that have been placed upon it and the market volatility? And a lot of those answers, unfortunately, lay in the hands of the Trump administration right now. There's talks of, the Fed stepping in to help, them escalating the pace of tax reform to the economy. There's talks of negotiation between 50 to 80 of these countries that we place tariffs on. But unfortunately, those three latter items, it's going to most likely take too long to get to where it can actually help the economy if the Trump administration does not act first to help ease some of the burdens that's been placed on this global economy by the tariffs that were recently announced on April 2nd. For the markets right now, there's really only two main relief buttons. The one is the Trump administration comes out and says, hey, we're going to pause the new tariffs for 60 to 90 days while we negotiate terms with our trading partners. The markets would most likely react very favorably to that. Or if they just come out and outright say, hey, we're going to reduce the amount of the tariffs given the magnitude that was announced on April 2nd. Notice on that list, I did not mention that the Trump administration successfully negotiates with all of our trading partners new favorable terms in the market rally. And largely it's because there's 180 countries that we put tariffs on. And even though there is talks that we might be negotiating with 50 to 80 of those individual countries, it's tough to imagine that the Trump administration has enough power to successfully negotiate with that many countries at the same time to reach a positive resolution. One of the main pain points of the market has not just been the tariffs themselves, but the magnitude of the tariffs. The tariffs that were announced on April 2nd were much larger than everyone expected based on the special Trump administration calculation that was done to decide what the reciprocal tariff rate would be. On the surface, it was supposed to be, hey, you tariff us 20%, we're going to tariff you 50% of that amount, so 10%. But there was also a special calculation done based on the trade deficit between the two countries. For example, and I'm just making up these numbers for example, let's say Japan assesses an aggregate of 10% tariff against the goods that they import from the U.S. into their country. Now, normally that would mean a 50% of that rate, so a 5%, but actually the Trump administration did a baseline saying it's going to be at least 10% on all these countries on the list, which from the get-go is not great, but it doesn't just stop at that 50% calculation. If it is found that Japan exports more goods to the U.S. than they import from the U.S., that means the U.S. is running a trade deficit. So they kind of took a proportion of the trade deficit, also added that into the tariff calculation. So instead of it being, let's say, a 10% rate on Japan, it might be a 20 or 30% rate because of those trade deficit amounts. Now, resolving tariffs versus trade deficits can sometimes be intertwined because based on the tariffs, that can then encourage or discourage a country from importing U.S. goods. They also might have a non-relationship between the two that has nothing to do with tariffs. So let's say the U.S. consumer just enjoys high quality electronics that come out of Japan. So by nature, we import a lot more of those goods into the U.S. and there is a trade deficit between the two that Japan just naturally buys less goods from us than we do from them because we're a bigger consumer and we just import more of their electronics based on quality. Now we're running this trade deficit and we're assessing a larger penalty on Japan. The fact that the U.S. had trade deficits with all these other countries might not necessarily be to the direct impact of tariffs by themselves. Like the U.S. economy as a whole, we spend more money than we make each year, which is why we run deficits every year by ourselves. Now, the trade deficits are part of that issue, but in a sense, if you spend more than you make, then essentially you are naturally going to most likely be an importer of goods because there's not enough goods being produced here by themselves. Otherwise, we'd be more balanced on the deficit side. So again, it's one of these issues where if the trade deficits are really the issues, are using the tariffs as the main way to fix that the real solution. The other negative effect of tariffs is they can have a paralyzing effect on economic activity, largely because these big companies realize there's a lot in limbo, a lot at stake here, so they might not be spending as much money to, as far as purchase new equipment, to hire more employees, to build that factory. They might say, hey, we have to hit the pause button on all of this, conserve cash because we don't know what's going to happen next. Knowing this paralysis in economic activity is taking place even now as we watch this trade war play out between all these different countries, it's not good enough that we eventually reach a resolution to this, whether it's a pause, an elimination of the tariffs, or like some type of negotiation. It's a timing issue that we have to get there in a certain period of time before just this paralysis of economic activity by itself cause a recession. Because if all of a sudden the economic activity drops off for Q2 and then we have a negative quarter of GDP, and then Q3 we're just getting on our horse trying to get some of these things resolved, and we have another negative quarter of GDP in Q3, technically 2 quarters of consecutive negative GDP is a recession. One of the action items that the Trump administration is trying to push forward is to incentivize more of these multinational companies like Apple that produce things all over the world to produce more in the US in an effort to avoid the tariffs. The issue then arises that these are multi-billion-dollar decisions. Like when you decide to build a big factory in the US, it might take 5 to 10 years for Apple to build a new factory that costs them billions of dollars, and they have to make the decision, well, tariffs are here now, but if they get negotiated away 2 weeks from now it doesn't make sense to produce in the US anymore. Or if we just wait out the Trump administration for 4 years and see what happens in the next administration, maybe all these tariffs go away 5 years from now it no longer makes sense to continue building that factory, and we're back to producing in China. Another reasonable question to ask is regarding labor availability in the United States. So if all of a sudden we get all these manufacturing jobs that come back within our borders, the unemployment rate right now in the U.S. is only 4.2%. The average unemployment rate in the U.S. is like 6%. So we have very few workers that are available to employ. That all of a sudden there's all these new jobs. The question is, who are the people that are going to fill those jobs and be able to deliver on the skill set that these companies need to build the products here in the U.S.? People have also started to ask what the Fed is going to do in this situation. If they see the economy start to soften amid all these tariffs that are coming out, will the Fed be more accommodative and start lowering interest rates to help the economy? But the Fed in itself is between a rock and a hard place, because tariffs by themselves are inflationary. They cause prices to go up. So the Fed probably realizes that they start lowering rates to help the economy and prices are going up because of tariffs, and then the economy starts to recover, we could end up in another hyperinflationary event like we saw coming out of COVID. So the Fed may be on pause for quite a while and might not be able to come to the market's aid like many people are hoping for. Then we've heard some analysts turn into tax reform, saying we know the Trump tax reform is in the works right now. It's working its way through Congress. If we get some type of fiscal stimulus in the form of tax reform, won't that help the economy? And there's some rumor out there that the worse the economy looks, the larger the tax reform can be, the larger the tax cuts, because it can be justified saying the economy needs these tax cuts because of all the weakness because of the tariffs. But the problem with tax reform aiding the economy is it's a slow-moving animal. It's got to go through, testing, and it's got to go approved by Congress. And by the time it actually gets put into place, best case scenario, maybe it's August 2025 or later that they actually get the tax reform through, approved, and then they start saying, hey, Social Security's tax-free, overtime's tax-free, tips are tax-free, but it's months before we get to that point. Is that going to be enough time to avoid a recession without the Trump administration making a pivot before then? It is no doubt a challenging market environment right now where the economy is almost balancing on the edge of a knife. It could easily tip more positive, where the Trump administration could come out any day, any hour and announce a pause, announce a reduction, and then the market could completely rally on that news, realizing there's hope that these big tariffs will not be in place for the long term. But on the other side of things, if they take too long to get to that point and there's too much of this paralysis and it eats away at the economic activity, or we don't get relief and this trade war escalates between our various trading partners, that could cause the economy to go into recession at some point in 2025. So really investors are challenged to bring in all this economic data every single day and watch the trends, and then have to make decisions on their asset allocation. I hope this information was helpful. If you have any questions, please feel free to reach out to me at greenbushfinancial.com. Thank you.